Good morning, traders, and welcome to BCI's morning market analysis. It's Friday, and we're heading into the end of the week with markets digesting fresh new inflation data, political headlines, and some interesting technical setups. Let's take a look at what's driving sentiment across currencies, commodities, and metals today. First up, let's have a look at the US dollar index, which remains under pressure this morning after softer CPI figures boosted market expectations for a September rate cut. Political pressure on the Fed is also making headlines, with both President Trump and Treasury Secretary Benson urging for an aggressive easing, even suggesting a 50 basis point cut, while the Fed maintains it will follow the data. This kind of political noise risks denting its credibility, adding another layer of bearish sentiment. Um, from a technical perspective, DXY has slipped below its 50-day moving average at 98.13 and is now testing support at 97.63, which is Thursday's low. A decisive break here could expose 97.49 and possibly the 97 psychological level. On the upside, short-term resistance sits at around the 20-day moving average, which is near 98.35 and then 98.62. Next up, let's have a look at WTI crude oil. Oil prices are trading around the $63 mark, which is their lowest level in over 2 months. Bearish momentum is being fueled by weaker demand forecasts and higher supply projections from the IEA. While OPEC has hinted at tighter market conditions next year, that optimism is being overshadowed by sluggish export activity and overall macroeconomic uncertainty. Technically, WTI is sitting under its 50-day moving average at 66.4 and its 100-day at 64.26, with the RSI holding below 40, which is a sign of continued downward pressure. Key support to watch lies around 61.35 and then the psychological level of $60. Any meaningful recovery would need to push back above the 5-day moving average at 62.56 and then reclaim the zone of 64.26 to shift the tone. Next up, let's have a look at our favorite gold, which is stuck in consolidation in a tight range between 33.35 and 33.40 after pulling back from highs above $3,400 earlier this week. Softer inflation data, a weaker jobs print, and a declining dollar are providing support, but record US equities and calmer geopolitical conditions are keeping safe haven demand in check. On the charts, gold is holding firm above support at 33.31 and the 80-day moving average at 33.32. Resistance is layered at $3,400, and with a breakout there potentially paving the way for 34.39 to about 34.50. A move below 33.31 could trigger a test of the 100-day moving average at 33.02 and the psychological level of $3,300. Lastly, let's have a look at the Australian dollar. Even with a stronger than expected July jobs data showing unemployment down to 4.2%, the Australian dollar slipped below 65 cents earlier before rebounding slightly. The market is still weighing last week's RBA rate cut against signs of resilience in the labour market. Technically, the Australian dollar is holding above its 5-day moving average at 65.33, which has now crossed above the 50-day average at 65.20. A bullish golden cross formation. RSI readings are above 50, which add to the constructive tone. Upside levels to monitor are 65.90 and the psychological level of 66 cents, while strong support remains at the psychological level of 65 cents and slightly lower than that, which is 64.49. Well, that's it for today's morning market outlook. As we head into the final trading session of the week, keep an eye on upcoming data releases, any surprise headlines that could shake up sentiment. As always, trade safe, manage your risk, and we'll catch you in the next update.